Welcome to Profile Traders. This is Reza and you're listening to my market analysis for March the 3rd. What we are looking at is a market that is still trading within the previous bracket that I gave you out, going from 2100 to 2117.75. So now we tested last night the bottom of the bracket. They couldn't bring in enough sellers to break it. As a result, it has rotated back to the other side of the bracket. Now we are again entering area of resistance. If we can clear this area now of 21, let's say 18 to 21.20, because whenever your main number is below a round number like 21.20, you cannot ignore 21.20, you have to include it. So if we do that, we are now approaching resistance again. We break that level up, we will be again in brand new high territory, and then we will have only one target to look for the upside, and that will be the touch of the trend or the touch of the resistance line up there at whatever point it will take place. The other scenario that will take place here is that tomorrow morning we come and we see that there is absolutely no appetite to the upside. If that's the case, I'm expecting then again a weekday and market to push back down and rotate towards the bottom of the rotation. So to make your life easy, either it needs to break above 21.20 to be in another break up mode and directional mode, or it needs to break below 2100 in order to exit out of this current bracket and then start a directional mode to the downside. Until we are within this bracket, just embrace yourself for more chops and churns until it decides to exit this bracket. Let's not also forget that this is going to be earning months, and as we know, one of the oldest shame and scam that we have witnessed in the last 6 or 7 years is that every time that we go into the earnings season, market gets very violent to the upside because the companies all use the borrowed money that they get at 1% from the Fed and to come aggressively buy their own shares, so that when the numbers come out they can show good earnings because the float of share has decreased compared to that earning. It's of course a scam, a disgusting lie, but it's been taking place since the easy money has been going on the last 6 years. So do not be shocked at all if you start to see aggressiveness to the upside with absolutely no reason. It will all be backed because of earnings coming all through this month. As far as oil, I go back again to what I said very specifically, I believe it was February the 23rd, where I tweeted a daily chart of gold, of oil, and I said very specifically, once it's gonna get to area of 47 to 48 to 47, this is our buy zone on a daily, and the trade is a return back towards 52 level. We did hit 48, we did break it by about 15 ticks, and from that point on it's been non-stop up, with the high that we reached today at 51, which is $1 shy of the 52 target that I had. And then from that point on it rejected back to the downside quite aggressively, and since this rejection on a retest was not challenged and the break took place towards the middle but below the middle, this is a definite circumstance where I can say that now significant area of resistance for crude is going to be 51.05 to 50.75. Now every time we will come up here to retest this area, the seller that defended this rejection from upside should be defending his position. If he doesn't defend and price is allowed to return back towards the 50.75, 51 area, in that case the POC up there should be an upside target at 51.60. In terms of support, obviously the day's range is big enough that I can say that the low of the day at 48.9 is now significant support. Therefore, unfortunately, we are now back into a bracketed market. We need to break below 48.9 in order to go challenge eventually 48.50. So below 48.9, 48.50 and then 48. And if we can break above 50 again, my target will be 50.5 and then 50.75. And for larger moves, obviously we need to clear today high or today low. But even if it breaks today's low, I still maintain that 47.75, 48 or big picture 48, 47 is a very, very decent price for crude, considering that I pay for a toilet paper that I wouldn't wipe the butt of my dog with it, called Priceline, trading at $12.59, almost $1,260 for a piece of paper. So $40 a barrel, $48 a barrel is not that very expensive. And considering all the nonsense and craziness that goes on in that region that supplies most of the oil. As for gold, also didn't do anything. All it did was a little bull trap here. We came and broke above 12.20. A bunch of excited breakup traders piled in. But rather than going directional up, it stalled at the break point and then failed. And the result of that failure caused a bunch of sellers to take profit on this last leg of 3 sessions up. So same thing, we are back to where we were a few days ago. Sideways bracketed market, undecided. Major support 1197, 1200. We do break that level. It's wide open again to drop towards 1180, 1185. If by tomorrow we maintain ourselves above 1200, then chances and good probability is that we are going to come for a test of 12.11, and once we break that, I'm expecting that we should go for a test of 12.20 level up there. So 12.11 is for a break up, and 1200, 1197 very strong support at the bottom down there. This was Reza with profiletraders.com. If you wish to join our group, you can get all the courses and 1-year membership to the room for $550. Take a look at it at the website. Thank you for listening. Talk tomorrow.